This is BofC Live, the video and podcast series of Business of Cannabis. Find out all that we do at businessofcannabis.com. Coming up on our BofC Live podcast conversation, we'll connect with Beena Goldenberg of Organigram, the Moncton, New Brunswick-based cannabis producer. This week, Organigram released their quarterly financials, which show increased revenue and market share, accelerated EBITDA positivity, as well as a key Quebec acquisition. So we wanted to connect with her. This is Beena Goldenberg, the CEO of Organigram. Thanks for being here, Beena.
Thank you. It's nice joining you again.
It is nice joining, and I find people are keen to join and talk about successes. And you've had several. You released your financials this week. There's been a big acquisition that we saw, I guess, over the holidays or in December. There's been some major investments you guys have made. Talk a little bit about sort of big picture where Organigram is right now, because it's gobbling up a lot of news time, but also a lot of market share.
Yeah, sure. Listen, we're very excited about the momentum our business has. Even following our fourth quarter results, we've had a great record quarter in Q1 that we just announced yesterday. So hitting a record for our company, and our obviously revenue growth really ties back to our recreational market share growth. We hit 7.6% market share in December versus 4.4% a year ago, so almost doubling. And that 7.6% market share doesn't reflect the benefit of the Laurentian brands that we just bought in December. So we'll talk about that soon. But overall, great results on our earnings. We actually accelerated our target for EBITDA positivity. We accelerated one quarter to Q3 of our fiscal 2022 because of the accretive nature of the Laurentian acquisition.
So let's dive into that now. So congratulations on all that. But dive into that now and talk about what it means for the company overall.
Yes, certainly. So there was a couple of strategic reasons we were very excited about this acquisition. First of all, it got us a presence in the Quebec marketplace, a really important market, third largest in terms of cannabis sales, but also given the SQDC has evolved to really support Quebec-based companies, having operations on the ground in Quebec was very important to us. The obviously opportunity to leverage that to our rest of our Organigram brands with the SQDC. But the other really important thing with Laurentian was they have products in two categories that we don't currently participate in. One was the craft flower, and they have their Laurentian brand with craft flower. And the second one was in the concentrates category, that they have their Tremblant Cannabis brand, which is a leader in hash in the Quebec market. So we're very excited about filling gaps in our portfolio and filling gaps in our regional presence with this acquisition.
Yeah, and Quebec's a huge market. I think it's often maybe overlooked, but certainly not from Quebecers like their cannabis, and they buy it a lot and all the time. And the SQDC, I'm going to screw up their initials, but it is, it is a difficult market to crack into, but once you're in it, the sell-through is quite extraordinary.
Yeah, no, absolutely. And the interesting thing about Quebec right now is because they don't allow edibles in that marketplace and vapes, really the concentrates area is an exciting area for us. And the Tremblant hash has really established itself in that marketplace. They just started to expand that presence outside of Quebec, but were sort of limited by their capacity. So as part of the acquisition, we announced a $7 million investment to expand their capacity, moving their craft flower from 600 kilograms to 3,000 kilograms a year, and moving their hash from 1 million units of production, 1 million units to 2 million units. So doubling that capacity. That will allow us to leverage our sales force nationally to expand those offerings across the country.
And there is, if you look at the numbers across the country, there are Quebec-based flower brands that are doing really well across the country.
Yeah, listen, we believe the Tremblant brand has got great recognition across the country, and as a premium offering, we think it'll do wonders for our portfolio.
Yeah, that's interesting. Another sort of thing that came across our desk as well was another additional investment into some synthetic cannabinoid research and development. Talk a little bit about that.
Certainly. So it's consistent with our focus has always been on R&D. That's back to our association with British American Tobacco as well, sort of longer term investment in technology and IP. And we have an investment in Hyacinth Biological, and they work on biosynthesis. And we had already invested, but we added another tranche up to $10 million of investment in the company. Represents just under 49% of the company. And what we're excited about this is the work that they're doing. We had consultants in to help evaluate their IP and really feel like they have patents pending, but really feel that they have a technology or an IP that is more scalable than some of our competitors. And really the benefit of biosynthesis is really to get some of those rare cannabinoids that you really can't get out of the plants because they come in such small quantities, but also a purer form of CBD that we believe really becomes interesting in the wellness, pharmaceutical, and food space down the road. Obviously, biosynthesis takes less cost, it's less environmental impact, and really the opportunity to create or have these cannabinoids without the cannabis plants. So it's a very exciting technology for us, but I would again put it in the same bucket as the product development collaboration we have with British American Tobacco. It's our continued focus on technology and IP for the future. So unlocking future potential. Today we have a lot of new products for today, but we continue to work on the future as well.
Yeah, I mean it's a pretty good rundown of what's going on at Organigram, right? It's like increased market share, accelerated EBITDA improvement, an acquisition in Quebec that brings brands into Quebec, but also from Quebec out, biosynthesis investment in R&D. It's a pretty good quarter to talk about.
Yeah, it's been an exciting quarter and really strong momentum on our business as we carry forward into our next quarter. So, we have had success. The question is, why are we gaining market share when potentially others are not as successful? And I'd say, we've been focused. This is a focused approach, really a cannabis pure play company. We've got some of our competitors that are defocused on integrations and restructuring and that is, those are big efforts when they do those, and they're shuttering facilities and optimizing and rationalizing. Instead, we're pure play cannabis focused on growing our market share, listening to our consumers, understanding what they're looking for, and innovating and launching products that meet those needs.
Yeah, and anybody who watches sort of top 10 lists of products across the country, well, what's over your, I guess would be your left shoulder and your right shoulder, right shred is shredding it. So kudos to you and the team. We always look forward to connecting with you, sort of get updates. So thank you for joining us here today. We look forward to connecting with you down the road and continued success.
Thank you so much.
You got it. That was Beena Goldenberg, the CEO of Organigram. If you like this program, please do subscribe. It helps us do the work we do. We're able to do what we do because of ongoing partnerships with Alterna Savings, Cannabis at Work, Cannabis Benchmarks, Ken Delta, Gallagher, Headset, and Torquay Maine. Find out all that we do at businessofcannabis.com.